All right. So we are going to deal with bank reconciliation statements. Bank reconciliation statements, which is also called the BRS. I'm hoping we will solve more questions. This will be the first type of question, followed by, let me see. Yeah, followed by, this is not clear. I think question 6 or followed by
The
let me
paper
see.
intake, their question, the man said it's going to be the same, just like you change figures. They are writing it tomorrow. I'm so done.
Yeah, so I'll solve three questions. One, two, and three. Okay, one, two, and three. So what I'm going to do here is about the theories. It's about the theory. So bank reconciliation statement. Bank reconciliation statement is used by entities that have or that issue checks. If you're a business and you issue checks, it also means you receive checks. So that issue and receive checks. That is a bank reconciliation statement. Entities that issue and receive checks, they use bank reconciliation. Why? Because these entities, they can be entitled to bank statements. Bank statements. Okay. Bank statements, to be able to track checks or to be able to track payments and receipts. Again, to be able to track what? Payments and receipts. So that is about the bank reconciliation statement. So the entity which we are talking about here, it must have, what is the name? It must have a cash book, which it records transactions in, and it must request for a bank statement from the bank. So the cash book is kept by the entity. The bank statement is issued by the bank. Is issued by the bank. So when the business takes the cash book, it would find we are reconciling. The word reconcile, we want to know similarities and differences. We are reconciling. We want to know the similarities and differences. So when the bank takes the cash book, it would be comparing with the bank statements. If this is the original cash book, if this is the original cash book, in the cash book, we have the debit side, we have the credit side. The debit side is used to record receipts. The credit side is used to record payments. It's used to record payments. In the bank statement, which will be issued by the bank, it has debit here, it has credit there, then it has balance there. And here we have the transactions here, the descriptions. That's how the bank statement appears. So whenever the business receives any money, it will record it in the cash book, be it a check, a bank. We have what is called double column cash book, single column, double column, and triple column. You can all have that. So let's say here's a single column. We are using T account. So the business receives a check from customer C or customer B, and the check number is check 8, and the amount is 5,000. It is considered or presumed that when the business receives the check, it's not cash. The business will take the check to the bank. The business receiving the check and recording the cash book, because the money is coming to the business, it will record the figure on the debit side. We are doing double entry in accounting. Double entries, the double entry principle basically says that the double entry principle, the double entry principle basically says when you debit one account, credit the other accounts. Let me put it simply. And it says for every debit, there must be a corresponding credit. So mostly in accounting, what happens on the debit side, or mostly we deal with two or more accounts for the purpose of the double entry. So when I debit one account, I'll go and credit the other account. When I credit one account, I'll debit the other account. So always there's debit and credit, like left and right, left and right. So what is happening here is this. If the business receives a cash, which is 5,000, on the debit side, when it comes to the bank statement, double entry, what would happen in the bank statement? Double entry. Hello?
Yeah.
Double entry. We are dealing with two accounts here, the cash book and the bank statement. If the business debits one account, debits the cash book because money has been brought in by a customer. When it is taken to the bank statement, what happens there? Double
You
entry.
credit it. You
Come
credit.
again.
Credit.
They will credit it. So 5,000 here. Where is this 5,000 coming from? It's coming from check D. Check. The business will not be looking at it will look at the customer anyways. So let's say the person is called D, and D is coming with check number 8. That's the check number. So let's assume that before the 5,000 came in, the business had, the business had a balance of 500. That's the balance, opening balance, opening. And the person paid 5,000, double entry. This 5,000 here, it was received from person D. Check amount is 8. Check number is 8. So what will be the balance? So when the bank statement, the check is taken to the bank and is credited, will it increase the volume? Will it increase the balance or it will decrease the balance?
Increase.
Come again.
It's an increase.
So now the new balance will become 5,500
Mhm.
because in bank, when they say you are crediting, they are adding more money to your balance. They are using the word credit because the money the bank is giving to you, it owes you that money. You have kept your money with the bank. So in the books of the bank, it owes you. It's a liability to the bank. So the bank owes you that money. That's why they are crediting it. So whenever the bank is crediting your account, it means they are increasing the balance of your account. So what do you learn? We learn that this double entry is diagonal. Debit cash book, credit bank statements. That's what we are looking at. What if the business paid money to supplier S, supplier V, and they gave supplier V check number 5, and the amount is 800 cedis. So they will give check number 5 to supplier V, paying an amount of 800 to the supplier. When the supplier receives the check, what will he take the check to?
The bounce.
What will the bank do to the check? Double entry.
Deficit.
So they'll debit it. So supplier V. So V, check number 5. We have what? 800. So they'll debit it. When the bank debits the account with 800, will it increase or decrease the balance?
So increase it. Mm.
Will it increase or decrease the balance?
I think increase. Oh,
No, when it credits, it will increase. When it is debit, it will decrease.
okay.
So it will be 5,500 minus 800, which will be what? 4,300. Are you getting it?
Yeah.
So what are we learning right now? What we are learning now is that in the bank statements, it is debiting and crediting.
Mhm.
So in the cash book, pay attention. In the cash book, when one side is debited in the cash book, in the bank statement, it is credited there. And when it is credited in the cash book, it is debited in the bank statement. Do you get it?
Yeah.
So for you to memorize it very well, simply say debit cash book and credit the cash book. So when you debit cash book, you credit the bank statement. When you credit the cash book, you debit the bank statement. Do you get it?
Yeah.
So when they are doing the reconciliation, that's how they do the reconciliation. They look at the debit side. Has it reflected on the credit side? No. Then they'll take a note. They'll look at the bank statement credit side. Has it reflected on the debit side? No. Right?
Yeah.
That's what they do. That is called the recon. They are looking at the differences and similarities. We saw 5,000 here on the debit side of the cash book. Did we pay it? Has it reflected in the bank statement? We've seen
Mm.
5,000. Okay, it is fine. We've seen debit side of the cash book, 200 cedis received in check. Is it in the bank statement? They said no. Then we mean that there's an issue with that 200 cedis. Why is it received here, but it's not in the bank statement? Well, that's a difference. So what is the issue? Then they do the same to the opposite side. Are you good?
Yeah.
Good. What they are doing is called reconciliation. Now, when they do the reconciliation, the bank has its cash book, which it has made so many entries in. And for example, the bank has its card, which it has made so many entries in. Then, when the bank is also when the company requests for the bank statement, they've already entered information in it. They cannot go back and change it. It's been recorded. So the cash book and the bank statements, which they are using for the reconciliation, they are already occupied with entries or details which cannot be changed. So what will happen is that, okay, if we are reconciling with the cash book, since we've already entered information or details into the cash book, let us use a secondary book or another book which can take the place of the cash book, which you can use to do the correction. So with the cash book, the book needed to do the correction is called the adjusted cash book. The adjusted cash book is the book needed to do corrections for the cash book. So if the issues are in the cash book, if the cash book has issues, they can't correct it in the cash book where they've already entered the details for the given period. Rather, they will come and make the corrections in adjusted cash book. Do you get it?
Yeah.
Then when there is a bank statement, when they order for the request for the bank statement from the bank, they cannot go back and correct the bank statement. So also when there are issues with the bank statement, they have to correct it. Where will they correct it? They will correct it in the bank reconciliation statement. That is where they will correct the issues in the bank statement. So it's the same thing. So the adjusted cash book is taking place of the original cash book. The BRS is taking the place of the original bank statement. So the same concept. If I debit the bank statement, if I debit the bank statement, I'll have to go and credit the BRS. If I credit the bank adjusted cash book, I have to go and debit. Am I making sense?
Yeah.
That's the concept you are trying to establish. So still, the double entry is in existence. The double entry is in existence. So don't forget that. Now, let us go on. So I just brought in this to explain something. So let me take it off. Now, the point is, so how do we make entries in the adjusted cash book? How do we make entries in the adjusted cash book? So the adjusted cash book will begin with a format which is adjusted cash book. Remember, the adjusted cash book is like taking the place of the cash book. So the same thing, debit is the receipt, the right-hand side is the credit. We would say that it can begin with balance brought forward. I'm using XX to represent the amount. So the balance brought forward could be on the debit side. It can also be on the credit side.
Mhm.
I will explain. Then on the credit side, we can have bank charges. So for example, whenever the bank deducts ATM fees, assume the business has an ATM card it uses, and the bank deducts card maintenance fees. How will it be? How will the bank do it in the account, in the bank statement? How will the bank treat it? Will it credit the account or debit the account?
Credit.
Come
Credit.
again?
Credit.
No. Whenever the bank is deducting money, whenever the bank is deduct
Oh, debit,
is
debit.
debit. Whenever the bank is deducting debit. So bank charges, will the bank debit or credit it?
Mm, bank charges, bank or debit.
So if the bank, look on the board, if the bank debits the accounts in the bank statement, in the cash book, how will it be treated? Double entry. If the bank debits,
It will
that's
credit
deducts the
it.
account. In the cash book, how will it be treated?
To be credited.
It will be credited. That's why I'm writing the bank charges on the credit side, because the assumption is that the bank will debit it. So here, the adjusted cash book, they have to credit it. Remember, the adjusted cash book is the book used to correct issues in the cash book. In other words, during the reconciliation, they saw that the bank has debited the accounts with some bank charges debited. So if the bank has debited, they have to also write it in the adjusted cash book as credit. Are you getting it?
Yeah.
They also have to write in the but they have to write in their cash book as credit, but their cash book is full. So they'll come and write this in the adjusted cash book, which is like a twin to the original cash book. Are you getting it?
Yeah.
So the bank has debited, adjusted cash book, which is like original, will credit it. Another thing is standing orders. Standing orders is when the business instructs the bank to make periodic payments on its behalf, either periodic or one-time payments. Let's say the business will say, the business will write to the bank and instruct the bank that every month, for the next 6 months, every month, pay 1,000 to this person. So every month they'll pay a thousand. They'll pay 1,000. So as they are paying that money periodically, will the bank be debiting or crediting the account in the bank statement?
The bank statement to be debited.
So if they are debiting, double inventory in the cash book,
To credit.
so they'll credit it. Dishonored check. If the business, if the business, if the bank rejects a check, let's say a customer brought a check to the bank If a customer brought a check to the bank will record it in the cash book, original cash book. They will take the check to the bank. The bank will say, we have rejected a check because of some reasons. Let's say the amount in words is not the same as amount in figures. There is insufficient funds in the account and other reasons. When the check is dishonored, where would the business take the check to?
The bank.
When a customer brings a check to the business to pay, the business will take the check and record it on the debit side in the original cash book. And then it will take the check to the bank. The bank will dishonor the check. Dishonoring the check means the bank will not pay the check. The bank will not accept the check and pay. So if the bank rejects the check, who would they give the check to? They will give the check to the business which took, or to the person representing the business who took the check to the bank, right? That take
Yeah.
your check. We are not going to accept it again because of some issues. Where would the business take the check to? They will have to return the check to the customer who gave the check, right?
Yeah.
So in the original cash book, the check has been received on the debit side because it was coming in. But after they dishonored the check, they have to return the check to the customer. So where would they record it? The check is going out. Where would they record it? Is it on the debit
Credits.
side or credit side of the adjusted cash book?
Credits.
Credit. So that in the original cash book, it's on the debit side. But in the adjusted, it's on the credit. So that they will balance it off. Balancing it off means assuming they receive the check and the check is 200. Now the bank says it's not paying 200. What will happen is that if they are rejecting the check will be 200. So that this 200 minus the 200 will give us 0, meaning the customer is still owing because the check wasn't accepted or honored. Do you get it?
Yeah.
Now, let's move on. We have this honored check. We can have errors. 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 We can have overcasts. We can have undercasts. They are all kinds of errors. So we have bank charges, we have standing orders, and we have other forms of, what's the name? Other forms of issues or elements or items which can reflect on the debit side of the bank statement, but it's not in the original cash book. We record them on the adjusted cash book. There are many. On the debit side of the adjusted cash book, we can have on the debit side, we are recording issues which are in the bank statement but are not in the adjusted cash book. So we can have dividend received. Dividend received. We can have interest received. Let's say the business has invested in another company and they were paying dividends. Dividends are the returns due to shareholders. So they pay dividend, they transferred it into the bank account. They didn't pay cash. They didn't pay cash to the organization. They rather transferred it directly into the bank account. So the dividend received. So when they went for the printout of the bank statement, they saw dividend received on the credit side. So if the dividend is on the credit side and it didn't go through the cash book, when they are reconciled, they will realize that no, the dividend is on the credit side of the bank statement, but it's not in our cash book. Therefore, where will we record it? Double entry on the debit side of the adjusted cash book. Do you get it?
Yeah.
Interest received. Let's say the business has invested in T-bills and they are paying some interest. So it will also be on the credit side because that figure is increasing the balance of the business with the bank. We can also have what is called credit transfer. Let's say a customer is paying. The customer sends money instead of maybe the customer is not away from Ghana. Instead of sending check to the bank to the business to receive it, It's rather transferred money from its account to the customer's bank account. Credit transfer. It will not go to the cash book. It will be on the credit side because they are crediting the account, but it will not be in the cash book. So when they see that discrepancy, they will record it in the adjusted cash book because it's not in the adjusted in the original cash book. And what, as I said, these are issues affecting the cash book because they are not in the original cash book. So a secondary book is opened or supplementary book is opened, which is called adjusted cash book, which is used to correct the issues which should have been in the original, but it's not. However, those issues are in the bank statements. Do you get it?
Yeah.
Good. Another one is called direct deposits. Direct deposit is when the customer has a check to pay to the business and goes to the bank and pays a check directly there. Very good.
Yeah.
So direct deposits. We can also have errors. We can also have overcast and undercasts. They can be written there. The balance brought forward I've written at the top. The balance brought forward says that. The balance brought forward says that
Is errors not under credits?
it can be on both sides. The balance brought forward I've written at the top, this one. This. When the original cash book, but when they closed off the original cash book, the balance brought forward was on the debit side. In the adjusted cash book, we also bring the balance brought forward on the debit side. The balance brought down, sorry, in the original cash book was on the debit side. In the adjusted cash book, you bring that balance forward on the debit side, the same side. On the other side, the credit. If in the original cash book, the balance brought down was on the credit side, happened to be on the credit side, when you are opening the adjusted cash book, you also bring the balance brought forward, the balance brought down, you bring it forward here on the credit side of the cash book. Are we good?
Yeah.
It will always be one side. It's not be the same. It's either the left or the right, debit or credit. The same vein, the balance carried down. It can be on the debit side. It can be on the credit side. It can be on the debit side. It can be on the credit side. Then we will sum up. We look at the two sides. Which side has a higher value? Between the debit and the credit, which side has a higher value? The opposite side on the balance carried down on the credit side, the opposite side will be the balance brought down. We write the same figure. We just do copy and paste of the balance carried down here. We only change the C to B, but brought down. Then we also do the same for the other side. We also do the same for the debit side. Balance, we just change the carry to brought down. The same figure, we record it down here. We are done with the adjusted cash book. Are we good?
Yeah.
The adjusted cash book is used to correct errors or issues with the original cash book. 2, the adjusted cash book is taking the place of the original cash book. On the debit side of the adjusted cash book are recorded items on the credit side of the bank statement which are not on the debit side of the original cash book. 3, the credit side of the adjusted cash book records items which are not in the original cash book but are on the debit side of the bank statements. Are we good?
Yeah.
Now, we are done with the adjusted cash book. What is used when there are issues with the original bank statement? What is used to correct it?
Adjusted cash book.
when there are issues with the bank statements. What is used to correct?
Yeah. B BRS.
Are you writing?
Yeah.
The BRS. So the next one, we go to the bank reconciliation statements. You need to understand the background. So our first visit, the bank reconciliation statement. We have the Ghana city sign here, or the two Ghana city signs. We will always begin with the balance per adjusted cash book. The balance per adjusted cash book. What is the balance per adjusted cash book? So look on the in the adjusted cash book on the left hand side. Is it debit or credit? Here, is it debit or credit?
Debit.
So balance per adjusted cash book. If it is debit, just write the figure here. So let me say debit.
Mm,
Write the figure there on the second column. Then we will say add unpresented checks. Unpresented checks. So unpresented checks, let's say we have two checks. So let's say check one, check two. So check one is this, check two is that. Then we add wrong credits. Unpresented checks are checks which have been, so now the BRS, we said the BRS talks about is used to correct errors or issues which are affecting the bank statements. So one of the things you'll be noting is that whenever we want to start with the BRS, we'll be asking ourselves, the error in the transaction, the issue in the transaction, is it affecting the bank statements or the cash book? If the issue is affecting the cash book, we will use the adjusted cash book to correct it. If the issue is affecting the bank statement, we will use the BRS, bank reconciliation statement, to correct it. Are we good?
yeah.
Good. Now, wrong credits. Unpresented checks mean that the business gave out checks. The business gave out checks to suppliers, and those checks, they were not sent to the bank as at the date of reconciliation. Not that the suppliers will not send the money or the check to the bank, they will send it. But if the business does, let's say the business does monthly reconciliation, so every month they give out a check of on 4th, which month is it? We are in June, on 4th June 2026. And the business does reconciliation, let me use 4th July, May, 4th May 2026. And the business does reconciliation at the end of every month. So it's the 31st March 2026. It does reconciliation. 31st March, it does reconciliation at the end of every month. And he gave us a check, oh, sorry, 31st May. So he gave us a check at or on the 4th May 2026. But as at 31st May 2026, the customer to whom the business issued a check, let's say customer A, he gave a check number 10. The amount is 800. As at the end of 31st May 2026, the customer hasn't, or the supplier, sorry, hasn't sent the 800 cedis to the bank to withdraw the cash. So as at the date of the reconciliation, we will say that the supplier has not presented the check which was given to it, because in the cash book, if the business is paying a supplier, will it record the entry in the debit side or credit side?
Mm,
In the cash book, if the business
mm,
entity is paying the supplier, will it record the entry, the check of 800 cedis? Will it record it on the debit side or credit side?
credit.
Credit. So the business gave its money, the supplier money of 800, and it will record it on the credit side. But as of the date the business was conducting the reconciliation, 31st May, the supplier has not sent the check to the bank. So they will not see the 800 in the bank statement. Do you get it?
Yeah.
It doesn't mean the supplier will not take the money to the bank. Maybe the supplier will take the money to the bank on 8th June 2026. Meanwhile, the check issued to the supplier was on 4th June. So as at 31st May, the supplier has not had time to go to the bank to withdraw the money. But then the supplier will go to the bank on 8th June 2026 to withdraw the money. But the concern we have in here is that the circumstance is that as at the date we are doing the reconciliation, which is 31st May 2026, that 800 cedis was not presented at the bank for withdrawal. In other words, if they request for the bank statement as at 31st May 2026, they will see on the debit side that that check number 10 of 800 cedis is not on the debit side because as at that date, the supplier hasn't presented the check at the bank. Are we good?
Yeah.
So it is called unpresented check as at the date of the reconciliation. Though the bank can, the supplier can send the check to the bank after that day. So assuming on the 8th June to, we have 30th June 2026. So when they were doing the reconciliation on 30th June 2026, then they saw that this 800 check, which was not on the 30th September or which was not on the 31st May 2026, has now reflected in the bank statement as at 30th June 2026. And the customer went to the bank on 8th June. So on this date of the 30th June, within this reconciliation period, we will say that this 800 is presented. Are we good?
Yeah.
Good. So when we say unpresented checks, it means that the figure is on the credit side of the cash book, but it's not on the debit side of the bank statement. That's unpresented checks. Do you get it?
Yeah.
It's on the credit side. It's on the credit side of the cash book, but it's not seen on the debit side of the bank statement. It's unpresented check. Now, it means that the issue has to do with the bank statements. So we are using the bank reconciliation to correct it. So that is for check 1 and 2. Wrong credit means that the business wrongly credited the business's account. The bank wrongly credited the business account with a certain sum of money. If the bank has wrongly credited the business's account with a certain sum of money, which is not for the business, how can the bank correct it? Mm-hmm. Are you listening to me?
Come again.
If the bank has wrongly credited the business account with an amount of money, that amount of money doesn't belong to the business. Let's say the money is for, okay, we have
Error.
Chidinma. Can you hear me?
Yeah. Would you say error?
Hold on. The money is for Chidinma, right?
No.
Chidinma Enterprise, but they've given it to Chinyere. The money is for Chidinma. The 500 cedis is for Chidinma. But they didn't give it to Chidinma. The teller mistakenly gave the money to Chinyere. It is called, no, hold on. It is Chidinma Enterprise you are working with, right? And the money is for Chinyere, 500 cedis. But mistakenly, the business has given the money to Chidinma Enterprise. And we are reconciling the books of Chidinma. And we realize that this 500 cedis is from a customer we don't know. We don't even know how the 500 got into our bank statement. So it is called wrong credit because the bank will credit the 500 cedis into our account. If it's a wrong credit and the business wants to correct it, how will the business correct it?
Mm,
Quick.
I don't know.
No, you should know. I have given you money which is not yours. And I realized that I gave you the money mistakenly. What will I do?
It's an error.
What will I do to correct it? That's what I want.
So you use the bank
I
reconciliation.
have given you money and I realized that that money, I shouldn't have given it to you. I've given you 800 cedis. Meanwhile, I should give you 400 cedis. And later I realized that the 400 cedis I gave you, I shouldn't have given you 400 cedis. What should I do? How do I correct it?
You deduct it
I
from
deduct. I'll take the money back. So the same thing with Chidema. The 500 cedis belong to Chinwe. Then they mistakenly gave it to Chidema, wrongly credited it to Chidema's business account. What will the bank do to correct it?
it will deduct, they will deduct
So deducting, will it debit or credit it?
debit.
It will debit. So when it is a wrong credit, the correction is that the business would have to debit it. Wrong
Debit.
credits. The
Um,
business will have to do what? They have to debit it to
debit.
correct it. Are you getting it?
Yeah.
So we write it here. So
So
when it's a, sorry,
unpresented check to the debit.
good. Unpresented check to, they have to debit.
Okay.
Wrong credit also, how will they correct it? They have to debit it. Unpresented checks to, how will the bank have to correct it? Debit it. So when it's a wrong credit, the bank has to debit it. This bank reconciliation, we are talking about issues the bank is the cause. Issues affecting the bank statement, the bank issues. Nothing about the cash book. We'll not put a cash book item here. Here they are about issues affecting the bank. We've always said that when the issue is affecting the bank statement, we'll use the bank reconciliation to correct it. So another one, we can have errors. Errors could be that here again, Chidema, we have Chinyere, right? There's a certain amount of money which should be given to Chinyere. Are you getting it? Or there's a
Yeah.
certain amount of money which should be paid to Chinyere, and the bank hasn't done it. So the right way to do it is that the bank will have to debit Chidema's account and pay the money to Chinyere. Are you getting it?
Yeah.
So we'll solve an example. We will get more about the errors. That is it. So after this, we will add all the figures here. We'll add all. When we add all of them, we will take the total to the right. Now, where did we pick the balance from for per the adjusted cash book from? We didn't pick it on the debit side or credit side.
You picked it from the debit side.
So have I explained anything like Alice to you?
Yeah.
And I said that the first and the last, they're on the debit side, right?
Yeah.
And the LIC on the credit side.
Yeah.
So when I'm bringing an item to the debit, let's say I have an asset, motor vehicle, and I'm bringing another motor vehicle to the debit side, do I add or subtract?
You
I have
add.
bought a motor vehicle one. This asset motor vehicle account. I bought motor vehicle one for 40 cedis. I bought another motor vehicle two for 60 cedis. Do I add the amount of the new one to the old one or I subtract?
You add.
I add. So the same for expenses, I add. This when I go to liabilities, when I bring more liabilities, I add. Income, more income, I add. Capital, more capital, I add. But whenever the expense switch to the credit side, it moves from debit to credit. What will it become? Subtract the negative or positive?
You subtract.
You subtract. Don't forget that, Alice. When the credit also leaves the debit side, credit side to the debit side, it will become subtraction. So don't forget that. We are going to use that here. So just as you said, when the items are always on the debit side, on the same side, so you see we pick the balance from the debit side. Unpresented checks, how do we correct them? Debits. Wrong credits, how do we correct it? Debit. When there's an error, how do we correct it? We debit, right? When there's an error, how do we correct it? We debit. Let's say that the business has yeah, it's the same similar to wrong credit, but the explanation we'll give you will understand it. So because they are all debits and debits and debits, they're on the same side of the account. And when they are on the same side of the account, what do? We add them. Do you understand it? That's why we said add unpresented checks. Are we good?
Yeah.
Number two. So we will say less, less uncredited checks. So the unpresented checks there we've written and the wrong credits, they are issues which are debiting on the bank statement. And don't forget, when they are debiting on the bank statement, in the cash book, which side is affected, debit or credit?
Come again.
If in the bank statements, the issues affecting the BRS, the bank statements are on the debit side, which side in the cash book corresponds to the debit side of the bank statement? Is it debit or credit?
Credit.
Credit. It means that, it means that as we are working on the debit side of the bank statement, the credit side of the cash book, it's okay. So the corresponding side in the bank, which is the debit side, they have the issues there. Are you good?
Yeah.
Like the 500 series example I gave, it was a supplier. The supplier should pay the money. They pay the supplier. The supplier should pay the money to Chidema. Then the bank teller pay the money to Chinyere. Or the money should be paid to Chinyere and the bank teller paid it to Chidema. So how does it has wrongly credited Chidema's account. So this Chidema's books. We are opening this BRS and adjusted cash for Chidema's books. So how can the bank correct it? They have to debit. So it means that as you are dealing with the debit side of the bank statement, the credit side of the adjusted of the cash book is okay. There are no issues there. Do you get it?
Yeah.
Uncredited checks. We say that check 1, let's say check 4 and check 5. We will also add them. We will add check 4 and check 5. Uncredited checks. Why do we say uncredited checks? So you see, if you are dealing with uncredited checks, which side of the bank statement are we looking at?
The debit.
Uncredited checks. Which side of the bank statement are we looking at? Look at the name.
Uncredited. The debit.
No, the one at the top. The one at the top. The unpresented checks, they were the debit side of the bank statement. So uncredited checks will be taking which side of the bank statement?
Mm. Credit.
The credit. Uncredited, credit side. So the add portion was taking the debit side of the bank statement. So there are less uncredited checks will be taking the credit side of the bank statement. So uncredited checks means that if these are issues affecting the credit side of the bank statement, it means the debit side of the cash book, all the issues there are okay. But the problem is with the bank statement. Do you get it?
Yeah.
For example, a supplier can pay a check. A supplier can make a check payment to the business for 500 cedis. And just like the unpresented checks, the business didn't submit or present the check to the bank within the period of reconciliation. If they request for the bank statement, they'll not see that figure on the credit side because if there's a customer pays money to the bank, to the business, that's money is coming into the business account. If it's check. So if it's check, it has to be taken to the bank and the bank will credit it. But because within the date of the reconciliation, like I did for the unpresented checks, within the date of the reconciliation, they didn't see the money on the statement. As at that date, it will be classified as what? Uncredited check. Are you good?
Yeah.
It doesn't mean the business will not take the money, the check to the bank, but within the date of the reconciliation, it wasn't submitted. But it was presented maybe after the date of reconciliation into another month. So within the date of reconciliation, it will be classified as uncredited checks. Are you good?
Yeah.
So how are uncredited checks corrected?
To the credit.
To credit it. So uncredited checks are corrected by crediting. Pay attention, I'm coming somewhere. Then, if we have wrong credits, and wrong credits can be solved by debiting, we can also have wrong debits. Wrong debits. If the business has wrongly debited the business account, how can the business correct it?
Credit.
So it can be corrected by crediting. Error. If there is an error, there is a money which belongs to the business and it wasn't paid in. The business must credit it. Let's say another example is like, let's say the Chidema again, Chidema Enterprise and Chinere. There is Chidema, we are preparing the books for the Chidema, and the customer has to pay 500 or 600 into Chidema's account, but I want to pay the money into Chinere's account, which is 600. The teller deposited or credited Chinere's account. Meanwhile, the money is for Chidema. After the date of reconciliation, right, when that is noticed, what must be done is that it's an error. The second one is an error. So what the business must do is that it must credit it. It must rather debit Chinere's account and come and credit Chidema with the 600. Are you getting it?
Yeah.
That's the error. That's what we are talking about. Are you getting it?
Yeah.
So it will correct it by crediting the error in this account, the error here. Let's say there is a debit, there is a charge which the business has forgotten or the bank forgot to charge. Let's say check charging for check booklet. And then so the money is still in the account or the balance is still the same, nothing has happened. Then later on they remember that hey, the person ordered for a check booklet. We've not deducted it from the account. Now that they've seen that it was an error, later they can go in there and debit the account with the amount. That's the error for the debit side. Are you getting it?
Yeah.
Good. So we've seen that the wrong debit is corrected by crediting. The error too is corrected by what? Crediting. Now, we are bringing credit items to the debit side. Will the credit items become negative or positive?
Positive.
Have you forgotten what we just did?
Negative. I thought it would
Negative.
change.
Yeah, it's changing. We are bringing it to the debit side. Credit item, we are bringing it to the credit side. We are bringing the credit items to the debit side to match the debit. Are you getting it?
Yeah.
So that's why we are saying less, less. So you come and subtract. The final figure here should be called as balance per bank statements. Balance per bank statements. Are we good?
Yeah.
Balance per bank statements. So this first phase, how the BRS can look like. There are several ways I can record it, but let me just write it in simple terms, which we can understand. Let's assume this is a first, this A, A part of the bank says BRS. We can write it in several forms, but let me just do it in these two forms. This is the first part. Let's go to the second part of the BRS. Second, I'm writing BRS here. So another sign, the currency signs, the currency signs. The first one, where did we pick the balance per adjusted cash book from? Which side, debit or credit?
Debit.
Now we are taking it from the credit side. So we will say balance per adjusted cash book. We are picking it from the credit side. If we are picking the figure from the credit side, watch. Between the unpresented check side portion and the less uncredited checks portion, which of the two sides has credit entries?
The unpresented check.
Between the unpresented checks side and the less uncredited checks side,
The less.
which of
Um,
the two sides has credit entries?
the uncredited check.
So you come here because you are beginning with balance pay. I just like the balance we pay from the credit side. We will rather add uncredited checks. So I'm just going to repeat all that I've written under the uncredited checks portion here. So check 4, check 5. They were recorded here. Wrong debits, error, because you are bringing credit to meet credit. So they would add, right? They're on the same side, right?
Yeah.
Then the unpresented, which was add in the debit side of the first BRS format, we'll go with less unpresented. Checks. Check 1, check 2. Are you good?
Yeah.
Then we will say wrong credits. We just copy it and we'll say error. We will add. Now we are bringing debit items to meet credits. Would they add or subtract?
Add.
We are bringing debit items to meet credit on the
8
same side.
minus minus.
Don't forget that too. There's it. So here, let me write it here. Here, we can have positive or negative. The negative is called overdraft, OD. So we will say balance as per bank statement. Your final answer could be positive or negative. If it's negative, it's called OD. The same applies to the first part. We can have positive or negative. We can have positive here or negative. The negative is also called OD, meaning overdraft. Are we good?
Yeah.
These two formats are okay. So these are, now the question could be, what are the causes for discrepancies between the cash book and adjusted cash book? What are the causes for the discrepancies? In other words, what is causing the issues between the cash book and the bank statement? Then you start listing some of these: dividend received, interest received, credit transfer, direct deposit, errors, bank charges, standing orders, dishonored check. Are you getting it?
Yeah.
Then we can also state, you can even list more: unpresented checks, wrong credits, uncredited checks, wrong debit. They are the issues causing the reconciliation problems between the cash book and the bank statements. Those are theories. Are we good?
Yeah.
So we have ended most of the theories. Now we have to solve one question. So hold on.